We're down 123 to start this week. Let's get to Bob Pisani. Bob?
Yeah, not a great start, Carl. 3-1 declining to advancing stocks. And once again, a lot of this is trade related. The more cyclical names are weaker here. Just take a look here. Semiconductors, thank heavens, still continuing to be flat. They started on the upside. But metals, mining, transports. Transports had a terrible week last week. It dropped below the 200-day moving average there. Not good for them. Industrials weak. Energy, again, these are cyclical names that we're seeing on the weak side. In terms of market trends and what's going on, I mentioned the Dow and the S&P. Well, they're down 3 straight weeks right now. That's a bit of an issue for them. We're also seeing the transports and financials. They had a tough week last week, the worst week since August for both of those. We saw rates drop. That didn't help. And, of course, we've been talking about the IPO market. That's down 15% off of its recent highs here. In terms of where we are, again, trade discussions going on. That's the most important thing. This weekend story that China might not agree to a complete, big, comprehensive trade deal has got everybody talking. But the 80% deal, as a lot of traders have been calling it, have been around for months now. And basically here you'd have no industrial reform here, no agreement to stop subsidies to state-owned firms. China would buy agricultural products. You'd get some commitments, still a little bit vague, on intellectual property rights. And the most important thing for the markets, the belief that there would, at the minimum, be no additional tariffs, or that they would roll back the tariffs. That, of course, either side of that would move the market positive or flattish. So that's going to be the key thing, and we're still unresolved on where all of that might go. Trade is the dominant mover of the market this year. You can see this in the dispersion of the sector returns that we've seen. Look the way I look at it, which is off their 52-week highs, not year to date, but where they are from their 52-week highs. It's all defensive stocks holding up: the consumer staples, the utility, technology, thank heavens, because the semiconductor business on growth prospects continue to hold up. But that's the movers on the market. And if you look what's furthest off of their 52-week highs, they all tend to be on the defensive side, on the cyclical side. Materials, banks down 12%, energy down 27%. Keep a big eye on energy. You're going to see a lot of tax loss selling around some of these energy stocks. We can talk about that a little bit later on and see what's going on with that. Here's what else is going on here. I think the important thing right now is we're going to see a lot of discussions about the IPO market. And I know it seems like a little quiet right now. We've got too many IPOs, but we've got some big ones coming up. Just today, we had an announcement of Bellring Brands is going to probably price in the next week. This is Post Cereals, big active nutrition spinoff. They own the power bar segments, nutrition bars, protein bars, really a hot thing. They're going to go public. Try probably in the next 2 weeks. 30 million shares, 16 to 19. This is not a nothing IPO. This is a more than $500 million raise here. So this is sort of the next big one coming up, and probably, as I mentioned, sometimes next week. IPO ETF, we talked about this. It moved right in line with the top of the market. So here it was in July. This top line is the IPO ETF. The bottom line is the S&P 500 for the year. And you see this whole outperformance gap that we've seen. And now you see how that gap in the last month narrowed considerably. We're essentially in line with the performance of the S&P 500 for IPOs. And up till here, we were up 30%. So that market has definitely come down and did coincide with the top of the market right at the end of July.